traders, Gary Wagner here, just after 10:30 in Honolulu, 4:30 in New York, on Wednesday, the 18th day of December, 2013, and this is the daily report for gold and silver. We have the precious metals pretty much all over the board as the Fed came out, announced that they will begin to taper. Tapering began with a reduction of $10 billion off the $85 billion monthly asset purchases. They also maintained that they would keep interest rates low. This market has been all over the board. I'll show you on a daily chart, but currently we're trading off about $6 on the day. You can see it has broken through 12.25, and that to me is what's really critical. Low 12.20.40, a high 12.45.70. Silver has also been all over the board. These metals were showing positive gains up till about 10 minutes ago. Silver currently trading off about 14 cents on the day. 1981, 1991 bid-ask spread, as I said, puts it off about a dime with 1958 on the low and 2038 on the high. To give you an idea of the kind of mayhem that we saw, and as you can see, we're currently just fluttering with 1224. These are the lows at 1220. 1 minute chart. I typically don't bring up a 1 minute chart, but I draw your attention to the announcement by, or the release, I should say, of the FOMC meetings in which they announced that they would begin tapering. The tapering is going to take place in terms of a reduction in the asset purchases from 85 to 75 billion. On a 1 minute chart, take a look at this range. You've got 1220, below 1220 in this 1 minute of trading, and the high is 1242. A $22 range in gold in a time span of 1 minute. Again, this is a 1 minute chart. So to give you an idea of why I personally want to kind of stand on the sidelines when these reports come out, this is exactly what I'm talking about. You get these tremendous whipsaw ranges as traders and investors begin to digest the information that came out. Now, the information that came out has really sparked a continuation in terms of the rally of the equities markets, but in the way that I am looking at it, the key to me is not so much the tapering and the fact that they're going to reduce it. The key is the fact that they made a concerted effort to state that they're going to keep interest rates low. We know that low interest rates, of course, is non-inflationary, and gold is a metal that reacts to inflationary news. So what are we looking at from here? Well, the first thing is that we have broken through 1225. I feel that that's fairly significant. If the market continues under pressure, of course, the key right now is first this record low, which is at 1211, and then below that, of course, is going to be 1181. The fact that we are trading below it at this point is absolutely significant. When we look at a 60-minute chart, and that's what we have up now, there's no question you can see the kind of dynamics we've had over the last couple of hours. Here are those highs up at around 42. Our current low is 20, but I can see some prints below that right in here, whether they're misticks or whether they're being reported differently to Kitco, which is where I quote my highs and lows from. But the real key is that we are absolutely at this point threatening, and I believe we'll be under pressure, and 1211 is going to be the first mark that we want to see. I think that there's a really decent probability that we will go and test these lows. Now, to our next chart. This is our half-a-day chart, standard candlestick format. And of course, what we are looking at here really is this activity as we break below this level of resistance. At this one, I've got it pegged at 1223. Now we're sitting at 1221. This is our 1211 low right in here, I believe. So we're absolutely, as you can see, threatening it as the market has broken below this. Now, the other thing that is significant, we talked about the fact that over this last, call it almost a month, we have been defined in terms of the activity in the market as a very narrow range that it's been trading. Now we've just broken on our cash market down below to about 1218 on the market, And as you can see, we're at 12.19, 12.18. So we are fluttering below. As I said, my sense is the next stop has got to be about 12.11. We'll see how the market reacts if, in fact, it goes to that level. We're at 12.18 now. But I believe that the market should continue under pressure, 12.17, till it hits about 12.11. And then we'll have to see. Because my real sense right now is the fact that the Fed has come out and it has begun tapering. I believe that that has largely been factored into the market. There was dovish statements, but more importantly, they came out and said that they're going to work to keep interest rates low. And you can see how that is really carrying over into the market as we now go back to new lows. We're now sitting at 12.1630, 12.17 on the day. To give you a real idea of what we're looking at right now, I've gone ahead and pulled up a short-term chart again. This is a 240-minute chart. It is the cash market spot gold. It is also in standard candlestick format. We just came off of about 12.16. You can see that there's a little tail in our most current candle, and that tail signifies this is the low, and it trades back off the low, and that's what creates this kind of a body type when we look at this particular candle length in terms of a 4-hour chart. There's no doubt, as I said, I would not be surprised at some point to see this market come back and challenge 12.11 in terms of a price. If in fact it does, 1181 is a clear and logical point to actually look at. Now, we've stood on the sidelines. I really want to let this dust settle because my sense is that we're probably going to head a little bit lower, but we have certain parameters that we want to look at in terms of making a play in the market. And especially as we get closer and closer to the holidays, I tend to back away because of the increase in volatility that you're going to get because of the lack of liquidity in the market. Also, when you have a thin volume market, even though you might see a screen print at 12.1850 as you get out of the market, your ask bid spread is going to widen dramatically when you have less and less volume. Traders, we are looking at a 3-day chart. Cash market, it is in Japanese average format. Let me go ahead and kind of compress that because what you can really see in this chart, this is a chart that's going to give us dramatic critical support levels. Now, 1229, we've absolutely broken through that at this point. It has been all over the board, but as you can see, currently trading at 1216.87. Now, we have this harmonics, and this harmonics is due to the fact that your 50% and 61% retracements effectively. And the retracements that we're looking at is this very, very long retracement as well as this very, very short retracement. The short retracement is the 61% at 1146. The 50% at 1141 is based on this dramatic fib retracement from really back to about 2004. It's as far back as I can really go and still see prices. This is just after the market begins to trade above $300. That to me is really not so much a line in the sand, but a very, very strong support area that I would expect it to hold if we continue to see the market under pressure. And as I said, the fact that we are now below these critical areas that we have identified, 1225, 1229 here, the fact that we are now trading below that, we could spike up. If we get closes above these different points, we'll see that it's still supportive. But if we continue to see this kind of downside pressure, my sense is that the market will probably go to test 1181. So how does this affect our current Elliott wave count and our interim and longer term forecast? Well, the only way that I can look at it is, once again, we've got our long 3, our 4. The fact that we're continuing lower, we're at 1216, really tells us that the opportunity that we might see what's called a truncated fifth wave. We talked about 2 various models. That probability becomes less and less as we reach these new lows. And in fact, what we will probably see is in terms of the way our model will unfold is this is wave 3. Excuse me, that's wave 4. This is wave 3, wave 4. Wave 5 will have a lower low, and I'm now looking for that lower low to be at around 1254, 1246, 1241. Those are the different areas that we have come up with in our fib retracement that come to those critical support levels. As I said, look for light trading. I'm not talking about something between now and say Christmas or between Christmas and New Year's, but as we get rolled through the end of this year and as we move into 2014, it at this point would not surprise me to see a retesting of the lows at 1181 as well as maybe a testing of a new low as low as about 1150. So how does this affect my longer term view of silver? As I said, I think that silver is going to follow suit with gold. Gold is just coming back off of those lows at 16, currently trading at around 1218 to 1220. 1976, that's our current price in silver. Silver is down today. Now, we have a couple of critical areas down here, and we really want to take a look at these lowest lows because if in fact we see gold come in and retest the current lows, I think that we're going to not go as low as we saw silver on this last plunge. Of course, this last plunge comes in just above about 17. But if we go ahead and blow this up, let's do that now. You'll see that the numbers I'm looking at roughly are about 18. You can see these lows here at 1890. Our current print, 1978. The next real level that it needs to hold, as far as I'm concerned on a technical basis, is 1958. If it cannot hold that level, my belief is it will dip through $19 and begin to head into the 18s, but the high 18s with absolute support right now at approximately, call it 1810 to 1820, and of course that is based upon this low right here. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.